All right, here we are again. We spent a little time here with the face-to-facers going through the test that they took, and they did real well, and I hope you folks at home did real well as also. So, we are back though in Chapter 8, Internal Control and Cache. Okay, so let's review a little bit of what we did last time. We watched a video last time, and it was with Kay Lemon, who was actually a convicted felon of theft, and she was stealing from her company. She talked about that situation, those sort of things. We also talked about the purpose of internal control. Going to the PowerPoints is to protect your assets, ensure reliable accounting, promote efficiency, and give company policies that people need to follow. We went through these principles of internal control. I want to go through these just a little, just real quick to kind of summarize what we did last time. We need to establish responsibility as far as who is supposed to do what, okay, in internal control. Another principle of internal control is you have to maintain adequate records. You want strong source documentation behind the journal entries that you make, behind the decisions that you make. You want to ensure assets. And we talked about bonding key employees, right? You want to separate the record keeping of assets from the custody of those assets. Otherwise, people could just steal those assets and make a journal entry to cover for themselves. You want to divide up responsibility for related transactions so it's harder for somebody to collude. This is not always easy if you have a small company, but there are ways that you can do that as well. We'll talk about that a little bit later. We want to apply technological controls. Sometimes this is video cameras, cash registers, those sort of things. You want to perform regular and independent reviews. Okay? People need to know that their work is going to be checked, and they won't always know when it's going to be checked, so that they'll keep things as they should be. Okay? Let's talk a little bit about technology and internal control. In some ways, in most ways, technology has made internal control easier. But there's a few ways it's made it more challenging. Number one, there's reduced processing errors. Okay, now the purpose of internal control policies and procedures is not always to catch thieves, okay? Sometimes it's just to have a policy and procedures in place to limit mistakes and promote efficiency, okay? So there are times people make mistakes and they just made a mistake. They weren't trying to steal from the company or anything, okay? But with technology, sometimes those processing errors will be reduced, okay? Does anybody here use Excel? Microsoft Excel, okay. When you add up a column, you know, it's a lot more efficient than the old way of banging it out on a calculator, right? Technology has also increased e-commerce, or allowed e-commerce, and increased even international commerce, okay. Anybody ever sold anything on eBay? Or bought anything on eBay or something like that? Okay. See, something like that would have been kind of strange 15 years ago, and now it's commonplace, right? But even doing transactions internationally is now possible with technology, so we have to be aware of that and how that affects internal control. One thing a couple things that technology has made it more challenging, though, is with computers, there's kind of a good news and bad news as far as computers and accounting jobs. The bad news is in a lot of ways, computers have reduced the amount of accounting jobs that are out there. Okay? The good news is the jobs that they eliminated were really the boring ones, really just the tedious, you know, banging on a 10 key or whatever jobs. Okay? Now that's a little bit of a simplification. Okay? But there might have been in accounting departments that were 7 or 8 people 25 years ago that now are just, you know, 4 people because of some of the technology. And you can go buy a pretty nice, sophisticated accounting software for less than $100, can't you? that you can use for your business. Almost everybody uses some sort of accounting software. Okay. Now that does make it a little bit more challenging if you have a smaller department and you need to separate your duties, doesn't it? Okay. And there may be duties that you want somebody independent of your company to do. Okay. Maybe you have a separate bookkeeper or something that works at an accounting firm or something, and you have him or her do your bank reconciliations or something like that.
So my dad does it.
Is that what he does?
Yeah.
He does that for a living, or
No. Well, his nursing home, he has his business office, but then he also has an accountant that he has separately contract that will check the books.
Yes, that's a good idea. It's a good idea. So he kind of uses somebody independent to do that. That's very smart. Okay? All right. Now, there are limitations of internal control. We can set up a good, strong internal control system, and it's not going to be perfect. Number one, there still is human error. Okay? People might be tired, or they might be confused, and they may make mistakes. Okay? They may make a poor judgment call. That's just going to happen. You're not going to eliminate all of that with an internal control structure. Then there also is human fraud. Okay? Now, I can divide up responsibilities for a related transaction. Okay? Like Peter, maybe I used to have you doing the entire deposit, and now I've broken it up between these 4 people. But if you 4 people go out to lunch and decide to steal from me, boy, that's going to be really, really hard. Very, very hard to eliminate that. Does that make sense? This is why I think I said last time, you don't want to hire best friends or husband and wife or relatives. Okay? Because if 2 or 3 people get together and decide they want to steal from you, it's very difficult to prevent. Okay, very difficult to prevent. Okay. And of course, the cost of internal controls must not exceed their benefits. And we should be doing a cost-benefit analysis on just about everything we do. But, the example that I always give is I used to work at a company that had a refrigerator full of pop, cans of pop. And you could go in and take some pop, and you were supposed to put 50 cents. They had a can in there. They had a little can, you put your coins in. Sometimes they had that for coffee. That thing was always short. It was always, every month it was short 20 or 30 bucks. What do? You're going to hire a security guard or set up a camera to watch that crazy little pop refrigerator? Probably not. The benefits would not outweigh the costs of that. Okay? So there's certain things that you're probably not going to sweat too much, but because you want to put your money and your effort on larger things. Okay? There's always going to be some employees who take some pencils home or some Post-it notes home when they probably shouldn't have, from their workplace. There's going to be situations like that. But you have to really weigh to see if it's worth, getting yourself in a big bother over it. Okay, if it's just a small amount of money. Better to focus your efforts on the larger things. Okay? All right, let's go through the homework real quick that I assigned. Okay, I think I assigned a couple exercises. Is that right? Okay. All right, let's go ahead and take a look at those. Okay. Exercise 8.1 and exercise 8.3. Is that right? Okay, exercise 8.1. Pacific Company is a rapidly growing startup business. Its record keeper, who was hired a year ago, left town after the company's manager discovered that a large sum of money had disappeared over the past 6 months. An audit disclosed the record keeper had written and signed several checks made payable to her fiancé and then recorded the checks as salaries expense. The fiancé, who cashed the checks but never worked for the company, left town with the record keeper. As a result, the company incurred an uninsured loss of $184,000. Evaluate Pacific's internal control system and indicate which principles of internal control appear to have been ignored. Okay? Okay, What were some of the things that you came up with? Okay.
Someone has the capability to write checks, they should be bonded. That's
Okay. There's two things going on there. Number one, I think what you're saying is they did not separate their asset custody from the asset record keeping, right? This individual had custody of the assets, and she had journal entry capability for the assets. This is just like Kay Lemon in our example, right? She could write herself checks, and then she recorded the checks. So you want to separate record keeping from custody of assets. The other thing that you brought up, Brian, was that the person was not bonded. So their $184,000 loss, it's just gone, isn't it? It's just gone. They're not going to recoup any of that. Okay? What else? Anything else?
I don't know if you can do this or not, but if it makes sense. But I put you could have a technology that would send a notice to someone when recurring transactions are committed. I don't know if that would.
Yeah,
help at all.
you could. I see what you're saying when strange disbursements are occurring. And you certainly I think you're thinking along the right lines. We'd have to know a little bit more about the business to know if that specifically makes sense. One thing I can tell you is this is, you know, we talked about smaller accounting departments have more of a challenge of dividing up responsibilities. A lot of companies now don't do their own payroll. What do they do for payroll? They hire an outside service. Have you heard of those? Like Paychex, I think ADP is one of those. And those are outside services that will do your payroll. One of the advantages that gives is it does take that function and divide that responsibility, peel that responsibility away from your company. And it adds a lot of safety for it. Okay? As a matter of fact, those companies, usually you can set it up with them where they will not pay an employee that has not been approved by the owner. Okay? So let's say if you four guys are my employees and they're used to cutting checks to you four guys, and then let's say I hire Morgan, they are not going to cut Morgan a check even if they see a time card or something until and unless I have said, yes, we have hired Morgan. She's a legitimate employee. Make sense? As an owner of a business, if you do your own payroll, I think it's probably a good idea to thumb through your payroll checks every now and then to make sure you don't see any strange names in there. Okay? One thing you'll hear me say in this business in this chapter is, if you remember nothing else from this class, remember this. If you are a business owner, okay, if you're a business owner someday, I encourage you to do your own bank reconciliation. Do not have your bookkeeper do the bank reconciliation. Do you know what that means? That means when the bank statement is sent to you or emailed to you, you verify it with your records. We're going to talk about that in this chapter, and I'll repeat this again. But was Kay Lemon doing the bank reconciliation at her company?
Yep.
Yes. Most of the examples of fraud that I've heard of could not have occurred if an independent person or an owner would have been doing the bank rec. But in all the situations, they were letting the one person who was stealing from the company do the bank reconciliation because they trusted them. Okay? Because they trusted them. You know what's also interesting? In almost every case of fraud that I've either heard of or been a part of trying to deal with, every one of them was a female. Isn't that strange? What do you think that means, Brett?
They're conniving.
Does that mean women are more evil?
Oh yeah.
It's just strange. I have not, and I'm not saying it hasn't happened. I have never been a part of a case of fraud where it was a male. It was always a female. Now, there's more females in accounting than there are males. Yep. Okay, so that's part of that. But it is interesting. It is interesting that Maybe so. Maybe we can learn something from that, okay? I'm just kidding you. I'm just kidding you. I guess what I would say is this, though. Don't ever make the judgment by just looking at somebody as far as if they're a potential thief or not in regards to accounting. Again, we look at the Kay Lemon video that we watched last time. She probably seemed like a pretty innocent person, didn't she? Okay?
Someone that invites you over for dinner, you know.
Somebody that invites you to dinner, make cookies for you. Okay? All right. Any other comments on exercise 8.1? Let's go to exercise 8.3. What internal control procedures would you recommend in each of the following situations? Okay, first one. A concession company has one employee who sells sunscreen, t-shirts, and sunglasses at the beach. Each day, the employee is given enough sunscreen, shirts, and sunglasses to last through the day and enough cash to make change. The money is kept in a box at the stand. Okay, what would you recommend there? Now, before you answer that, sometimes the way that I solve these is I think, if I worked for this company and I wanted to steal, how would I do it? How would I do it? Okay? Well, I know how I would do it if I was this company. I would tell people, if t-shirts cost like $15, I would tell the people, well, they cost $20, and I'd keep the extra $5 for myself, right? That'd be one way you could steal from them, correct? What are some other ways you could steal or internal control processes that we should put in place here? What would you do? What do you think? What's the challenge here? They can't really wheel around a cash register, can they? Okay. So that's kind of difficult. So what would you put in? What suggestions do you have?
Have a good inventory account so they're just not selling stuff and putting it in their pocket, like the money.
Okay. What I think you're talking about is making sure that if they check out a certain amount of t-shirts and hats and sunglasses, at the end there's a reconciliation. You either return the t-shirts, or for each t-shirt that's not returned, you should have some money for that, right? Now that still wouldn't prevent what I'm talking to you about as far as overcharging customers and then keeping the money for yourself, okay?
Receipts?
Yeah, how would you do a receipt though? How would you do a receipt? Because you can't.
There's the pads that have the copies,
Okay,
carbon
you
copies.
might try that. They also actually have some handheld things now that you can put in a record and it will print out.
Well, there's
something.
also on your phone you can do little applications where there's an application where you can type someone's credit card number in.
Yeah,
and,
chances are they won't be paying with a credit card, but maybe they would. I don't know. On a beach, I don't know.
Then they get it. The company, it'll go back to the company as how much do you charge for whatever, and they know how much to expect when you come back.
Yeah. Another thing one student suggested from a different class in a prior semester, and this is probably a good idea, is they said, what I would do is I would make the price list of how much each thing was. I would make it into a T-shirt that the person selling had to wear. Okay. So that you could tell immediately if they were wearing those shirts. So, and this is not too much different from if you go to a Royals game and a beer vendor will have a big, pin on them that says beer, $8 or whatever they charge for it. But if you had on the back of your shirt how much each thing was, and if they were trying to tell you differently, you might cry foul, okay? Does that make sense? And that way you could tell if they were actually wearing that shirt and advertising it, okay?
You can say, well, even with that, you can say, well, the prices went up today,
Yeah,
there's
but
been a change.
that's not going to fly. Somebody's going to say, what?
You could do the independent reviews, like do Secret Shopper.
Yeah, that's a great suggestion, Kristen. I know what I might do is if I had a friend come to the beach, I said, hey, I'm going to do me a favor. Buy some sunglasses and buy a T-shirt and see what they say. See how that goes. That's kind of what you're saying, isn't it? That's a good idea. Good idea. Okay. Well, your brain's thinking along the right ways. I think probably the main one, Gil, is what you said, is make sure that you have an accounting at the end of the day for the cash and the inventory that wasn't sold. Okay? Good. All right. Let's look at the second one. An antique store has one employee who's given cash and sent to garage sales each weekend. The employee pays cash for any merchandise acquired that the antique store resells. Okay? Oh, I could think of great ways to steal here. What would you do, guys?
Something for $10 when it actually cost me $5.
Yeah. Yeah, or even more than that. Let's say you found an antique chair that you know the owner of the business would happily pay pay $200 for, right? And you could and let's say the garage sale person was selling it for $50. You could buy it for $50 and tell your owner it costs $200 and keep the $150 for yourself, right? Boy, that's a toughie. This one's kind of a tough one, isn't it? I think this one's tougher than the other one. Okay, what do you do there? Some suggestions. Here's two suggestions I've heard in the past, but I don't know that they're real good. You said you could ask for a receipt from the garage sale owner. Okay. Well, the problem with that is, have you ever manned a garage sale?
Yep.
What would a receipt be? You'd jot down a piece of, yeah.
A sticky note?
A sticky note with a number on it, which I could forge those all day if I wanted to, right? The other thing that somebody said is, well, you could have two people doing this and they're kind of checks and balances on each other. Yeah. How long till I send, Brian and Gil out in a car together to garage sales before you guys are having lunch at the local Chick-fil-A and thinking, you know what? I just had an idea how we could steal. I mean,
I give it a day.
yeah, I mean, seriously, it maybe a day, right? So I don't think either of those methods work real well. Can you think of anything else?
I'd have buying, hand them a card and get their info, have their own sales card or whatever to hand to them, their name and all that, and then have get their contact information. I'd call them,
That's probably not a bad idea. Maybe not call everyone, but call a sampling of them. Yeah. That's probably about the best idea, Jake. Is what he's saying is, hand them a card that says something like, hey, can you please provide your contact information on this? Now, the only thing bad about that is, again, I always think of what I'd do if I wanted to steal. I'd just give them contact information. I wouldn't give it to them, and I'd fill it out myself and put my buddy's phone number and name on it. And I'd say, hey, by the way, if my boss calls, tell him that the antique chair costs $200. Okay? It's tough, isn't it? There's strange ways that seem kind of odd that you could do. And one thing I thought of in today's world is you could actually take a picture of the owner. Take a picture of the owner. Like if Peter is manning the garage sale, make a sign that says how much this chair costs blank, and you take a picture of it. Okay? And then you
could get the garage sale owner in on it too. Be like,
yeah,
hey,
I mean,
put a sign that says $200, and we'll split the difference.
You're right. You're right. There's always going to be, there's never going to be a perfect method, right? And what you're talking about, Brian, is if enough people collude, there's nothing you can do about it. But you can certainly make it much, much more difficult, okay? There's a reason that most of my college students have burnt CDs and DVDs for each other, but that the majority of them have never gone into Best Buy and shoplifted. And the main reason is one of them, you probably get caught, and the other one you won't, right? So you can certainly make it more difficult. And I will tell you this, if somebody was trying to collude with garage sale owners, before long one of those garage sale owners would say, hey, I need to give you a call here. I think something's weird is going on.
Who are they going to know to call?
Make them wear a T-shirt, make them wear the T-shirt with the name of it, or give them the contact information. Okay. I'm just saying, if they did that on a repeated basis, I think eventually they'd get caught. Okay.
Hearsay.
Huh?
Hearsay.
Well, hearsay. If I have an employee who has enough hearsay, I'm going to go ahead and fire him. I'm going to say, you know what? I think we've had enough hearsay on you. Bye-bye. I can find somebody else to do this, right? Okay. All right. I will tell you, my brain is kind of, and I guess it comes from auditing and doing some consulting with companies who've suffered fraud. I have this thing where if I go into a restaurant or to a store, I'll sometimes tell my wife, here's how you could steal from this company if you wanted to. That person could be doing this, and this person could be doing that. That's all it would take. Easy, easy. Okay? Now, not that I would do this, but I can just immediately spot the way that you could steal. Okay? Now, what I have a tendency to believe, and I don't mean to be cynical, but if there's a way to steal from the company that's easily performed and you won't get caught, somebody's doing it. Somebody's doing it. Do you know what I mean? I've gone to restaurants before, and it'd be so easy, and I know what's happening. I audited a company once that I guarantee you their losses were in the tens of thousands of dollars, because it was a company that gave tours in vans of local sites, and they would pay with cash as they got on the bus, and then they would give them a ticket or something like that. But I guarantee you there were 20 people on those vans, and probably only 8 of them were ever recorded as being paying customers, and the person pocketed the other amount. You know why? One of the reasons I knew this is because the people who drive those vans, they got paid horrible money, and yet nobody ever quit the job. Nobody ever quit the job. I think that's because they were making more money on the, taking people that didn't belong, okay? So, I can remember one more story. I can remember when I was in Washington, a long time ago. I was in Washington, D.C., and I went and saw a Boston Celtic game. And anyway, when they picked us up, the cab guy picked us up, and he had a station wagon. And there was a shortage of cabs, so he said, I'll take all 8 of you in my station wagon if you want to be crowded, okay? If you want to be crowded, I'll put you in and we'll get you to the, wherever we're going, the hotel or whatever. And everybody would rather be crowded than have to wait another 25 minutes for another cab, okay? So what he did, I guarantee you what he did, was he just rang up one fare. I'm just taking this guy. You see what I'm saying? And he turned that money into his boss. And then all 7 of you who paid cash, he just put it in his pocket and called it a good day. I guarantee you that's what he did. Because how would his boss know if there was one person in the car versus a whole bunch of people in that car?
The camera?
Don't they split the,
Huh?
don't they split the cost? Like, if you're going 10 miles, it costs
No.
It costs you all the same.
Yeah, it cost them all the same. And most people are like, yeah, just get me back to the hotel. They don't want to hang around, the basketball arena at midnight. So just get me back to the hotel. I guarantee you that's what he did. I promise you that's what he did. Yeah, you could have a camera, but there was no camera. This is 20 years ago, if nothing else. Okay? So, all right. Let's move along, okay? Let's move along.
Do we have those
Oh, the PowerPoints?
Yes, please.
Yeah. Yeah. Go ahead and hand those around if you would. Just pass those around. For you folks at home, what he's talking about is the PowerPoints that I emailed to all of you. I think it is a lot easier when you're following these lectures to have those in front of you. Okay? All right, let's keep going. Let's talk about the control of cash. Why do we talk about, we need 2 more. Why do we talk about cash in the chapter on internal control? Probably because cash is the thing that people would like to steal the most. Yeah. while they'd love to steal a CD player, they'd love to steal an iPod, but all things being equal, people would rather have cash because then you can go buy whatever you want, okay? And in businesses like casinos, where it is all poker chips and cash, boy, you better have a strong, strong system of internal control. You ever watch those like the Learning Channel or Discovery Channel, and they talk about thieves in casinos and stuff? I think those are fun to watch. They have if you're going to steal, my friends, do not steal from a casino, okay?
That's why I like Ocean's 11, Ocean's 12.
Yeah, those are kind of fun movies because you really, really have an internal control system that you have to get around, okay? All right, going back to the PowerPoint. In regards to control of cash, handling cash needs to be separated from the record keeping of it. You need to put your receipts in the bank promptly. Anybody ever worked at a business? It's like, where's Mary? Oh, she ran the deposit to the bank, right? When I worked at a restaurant, they were always running the deposit to the bank because you don't want a lot of cash sitting around, do you? Cash disbursements are made by check. Okay, you don't want to just shove a bunch of $20 bills in an envelope, but you want to make your disbursements by check so that you have a record of it. Okay? What are we talking about when we talk about cash? Certainly we're talking about coins, currency, dollar bills. We're talking about it's in bank accounts, what's in checking accounts and savings accounts. There's also something called cash equivalents. Now these technically are not cash, but they're so close to cash that we kind of treat them as cash. These are short-term, highly liquid investments that are very close to maturity, and we even know what cash amount they're going to turn into. This might be in like a 90-day certificate of deposit or a 90-day treasury bill or something like this. Okay? But when we talk about cash, this is what we're talking about. Over-the-counter cash receipts, we should use a cash register. Okay, that's been going on for a long time. Cash register with a locked-in record of transactions. And then at the end of the day, you want to compare your cash register and how much money is in there or not in there with the report of what should be in there, correct? With each of those transactions recorded. If you get cash receipts by mail, it might be good to have 2 people open the mail. Divide up those responsibilities, okay? Control of cash disbursements. Again, we talked about how we should make our expenditures by check. Now, there is an exception. That's the petty cash fund, which we'll talk about here in a minute or two. We talked about how you want to separate the custody of assets, which would be the authorization for signing checks, from the record keeping. We also want to use a voucher system. What is a voucher system? A voucher system is all of the detail for getting approvals and initials and all that to buying things. And you keep all of those source documents together with the check that's cut. Okay? If you ever go look through an AP file at a company, they don't just have copies of the checks that they wrote. They usually have stapled behind all the supporting documents that support that disbursement. Okay? Might be a receiving report, a signed purchase order, the invoice from the company, the receiving report, all those sort of things. You can see some of the examples of things that might be stapled behind a cash disbursement. All the supporting source documents. Okay? Okay, let's talk about petty cash. Now, we talk about you're going to make your disbursements with checks, but there's going to be exceptions to that. Because if you have a check disbursement, you've got to go through that whole voucher system of having it authorized and have the checks cut and all this sort of stuff. Well, what if somebody just comes in, maybe a delivery person or whatever, and you need to pay them quickly for, whatever. You don't want to go through that whole rigmarole of having a checks authorized and signed by the owner and cut and all that sort of stuff, right? You just want to pay them. So what most companies will do is they will have like a little box, usually it's at the front desk, and it'll have $200 or $300 of cash in it. And you can use that for disbursements, for small items. Okay? For example, we're out of our printer cartridge just went bad. Oh, we got to get one real quick. Why don't you just run to the store? I'll give you $50, go buy a new printer cartridge. And then when that person buys the printer cartridge, what do they need to bring back?
Receipt.
They need to bring back a receipt and change, right? So can you lose money from a petty cash fund? Yes. But if you only have $300 in there, the worst case scenario is you'll lose $300, right? Okay. Does anybody work at a place that has something like this? Petty cash fund? Okay, nobody? You probably will someday. Okay? It's a very common deal. How does that get set up? Well, what you do is you take a check from your bank, give it to your petty cashier, whoever's going to handle that, and you make the journal entry that's at the bottom of that slide. You credit or decrease your cash account, which is usually going to be your checking account, and you increase an asset called petty cash. So in this instance, they have put $400 in their petty cash little metal box or whatever that they keep at the front desk. Okay? And that's what this is talking about. You write a check to your bank, and they give you $400 to put into your little safe or your little metal box where you're going to keep your petty cash. Then what's going to happen is you're going to pay different expenses. Like they paid a delivery courier $80, and they bought some stamps, $45 worth. As you guys said, you need to have receipts for those items, correct? If you find petty cash is gone and there's no record or receipts, chances are somebody's taking your petty cash. Okay? Or if you find falsified receipts. Okay? Now, let's look at something real quick here. So if you have a petty cash fund, okay? So this is your petty cash box. And if you have $400 cash in there, and then you pay a delivery person $80, okay, for a delivery, okay? Well, you're no longer going to have $300 cash, are you? You're going to have $320 cash, correct? But what are you going to also have in there? An $80 receipt, okay? The sum of your cash plus your receipts always needs to be equal $400 in this case, or what you set your petty cash fund up for. Does that make sense? Okay. So going back to the PowerPoints, what they do periodically is they have to replenish that petty cash fund, right? Because you've dispersed it. So what they do is they take those receipts out. Now they opened up their box here and there was only $275 left. So they had to credit cash for $125 more, and then they needed to go through those receipts and record those. Postage expense, delivery expense. Okay? You can read about this in your book. Petty cash is not a real difficult concept, okay? I think they give us another example here. Let's see what they do. Okay, let's go through this real quick. I think we can make it through this. Tension Company maintains a petty cash fund of $400. The following information was taken from petty cash vouchers for July. Okay? So what they did is they found there's 4 receipts in there for travel expenses, customer lunches, express postage, and miscellaneous office supplies. So see these 4 items. Just imagine that to be 4 receipts. Okay? Now, what if let's replenish the fund if the balance on July 31 was $137.80. Okay. All right. We set this fund up for $400. The first question I always ask myself is how much money is in there now? Now there's $137.80, right? So how much cash do we have to put back into that box so that we once again have $400 cash? we need to put 262.20, right? Because the 137.80 was what was in there, but we want to put enough in there to bring it back up to 400. Okay? Does that make sense? So that's the first thing that we do is we ask ourselves, how much money is in this box? How much more money do I need to put in to bring it up to the $400? Now we're going to prepare the journal entry. Okay? Let me get my pointer going here. So the first thing I always do is what we just did. How much cash do I have to put in to bring that amount up, back up to $400? Now notice that I am crediting cash here and not petty cash. I am not crediting petty cash. Okay? I'm crediting cash because I got to go to my regular cash account to get more money to put in the petty cash box. Okay, and then the next step that I do is this. I record each one of those receipts. Okay? Travel expense, $79.30. Entertainment expense, $93.42. Postage expense, and so on. That is the second step to replenishing a petty cash fund. Okay? The last thing is, after you've done step 1, after you've done step 2, then you ask yourself, does that journal entry balance? Do the total debits equal the total credits? Well, they don't in this example. So you have a third step, and that is to debit or credit cash over and short account for whatever you have to do to make this journal entry balance. And in this case, we are debiting cash over and short for $2. Okay? Now this account, cash over and short, is a temporary account, goes on the income statement. It can have either a debit balance or a credit balance. If it has a debit balance, that means it was cash shortage, like an expense, debit like an expense. If it has a credit balance, it means we're cash over. Now, what do you think usually is the case? Are you usually short your cash or? Short. Why? Because if you don't pay somebody enough change at McDonald's, they're going to say, hey, you didn't pay me enough change. If you pay them too much change, what are they going to do? Thank you, and they're going to leave. Okay? All right? So, in this case, they were short $2. Would you have lie detector tests at your business to see who stole that $2? Probably not. Probably wouldn't follow the cost-benefit analysis. Okay? But that is the entry. Think of it in those 3 steps. That's still the 3 steps that I do. Okay? All right. What I want you to do for homework then is I want you to do, and I'll put it up on the Elmo here. I want you to do exercise 8.4 and exercise 8.5. Okay? So that is all we will do. Next class period, make sure you have your blue books because we're going to be working on some bank reconciliation stuff. Okay, it'll be an important period. But exercise 8.4, exercise 8.5 for next time. We'll see you.